Hello and welcome to iTradeAIMS. In this video, I'm going to talk about what is the trend of the day. So the question of what is the trend of the day. Before we can discuss that, let's first find out what is a trend. Now, a trend can be defined in different ways, but the simplest way to actually define a trend is what you see on the chart. Look at the price. If the price is going from the bottom left of the corner to the top right of the corner. That's the simplest way of looking at the chart. For example, when the chart was over here and you saw this and you look towards the right of the chart, you can see that the trend is up. There are other parameters that you can use as well. For example, on this chart, I have a 10 exponential moving average and a 20 exponential moving average. One definition would be when price is above the 10 EMA and the 10 EMA is above the 20 EMA, then the trend is up. Right now on this chart, the trend is up, but at the same time it's kind of sideways because it's going up and down. The other parameter, the other thing about trend is that the trend is different on every time frame. So this is the chart of the DAX 30. This is an index, and this chart is right now at the monthly. So if I go to the weekly chart, the things might look slightly different. So every time frame has its own trend. If I go to the daily chart, around this point, by this definition of the trend, when price went below this, below the 10 EMA, and the 10 EMA then opened up when price went further down, and 10 EMA is separated from the 20 EMA, the trend was down all the way till this point. And when price crossed the 10 and the 20 EMA up, and then when the 10 EMA went above the 20, the trend was up. So right now, the trend is probably now turning around because now price has closed below the 10 EMA. Another way of looking at the trend would be what we do at AIMS is that we look at the gator. So we have this indicator called AIMS the gator, which is based on the Bill Williams alligator. These three lines are the Bill Williams alligator, which is a standard indicator that you can find in MT4. So when price is above the green, and the green is above the red, separated from the red, and the red is above the blue, and for iTradeAIMS, for our purposes, we want the gator as a whole to be above the purple. When that happens, we say the trend is up. So around this time, the trend was up. But was the trend up during this time on other time frames? Let's find out. If I go to the weekly chart, on the weekly chart, you can say that the trend was up around this time because the lines are open. If I go to the hourly chart, now when I look at the trend, I look at the lines and the price. All the three lines are mingled, although they are below the purple line, but the trend is actually sideways. So all of the trend, this is different ways of looking at the trend, and every time frame will have its own different trend. So if I go to the 5-minute chart, right now the 5-minute chart is going sideways because the lines are intertwined, they're mingled. If I go to the 1-minute chart, the trend right now is slightly up. Now, that's just the simplest way of looking at the trend. But then, of course, there are other ways, other things that we need to look at. For example, the price levels to the left. But for the purpose of this video, what we want to know is the trend of the day. So we have the monthly, every time frame has a trend, different definitions of a trend. For example, for an Elliott Wave specialist, the trend would be defined by the count. So when they look at the count, they can predict what would be the next trend. So that's one way of looking at it. But there's a concept that we call the trend of the day. Now we're going to go into that. Right. So on this chart, what you see, there's a blue line, blue horizontal line. So we know that one way of defining the trend is using the moving averages. And we can use those moving averages on different time frames, as we can see on different time frames. But at the same time, let's suppose I am on the 1-minute chart and I want to know what is the trend of this session. So that simple concept is very powerful. So how would I do that? Well, I can use the moving averages as well as in conjunction with one other thing, and that is the open price. So this concept originated back in the days in the pits when they used to look at price only. So obviously they were looking at the ticker, they were looking at the price, and as soon as the bell rang, they looked at the price, and wherever price opened, that very first moment when the price was displayed, that was the open price. Today, the DAX opened at this price. So we have coded this indicator, gives you a horizontal line based on that. So if we look at this line here, this is an indicator that prints the horizontal line at the daily open. So it's set at 10 o'clock. 10 o'clock is the 8 o'clock UK time. So it would take that price, and at that price it will draw a horizontal line. Now to find the trend of the day, you simply have to analyze where has price moved and how far has it moved away from the open line. To find the trend of the day, draw a line. I'm on the 1 minute chart, and right at the London Open, I would like to put a horizontal line at the open price. So my open price is 13228. If that is the price, so when price moves away from it and then it stays above it, we will call it that the trend of the day is bullish. And once you start doing this on your charts, you will find that the market usually reacts at that level. So if you look at today's price, it went up, came back to it, and as soon as it came down, it looked like a downtrend on the moving averages point of view, but the trend of the day was up, and it pushed price up again. And then price went up away from it. So around this time, the trend had moved around 88 points from its open. Then it came back to it, and if you look at it, I'm going to move to the M5 chart. If you look at it, price went up, came back around this level, bounced, went up. When this happened, this was a type of move where price stretched too fast away from the average, and so price snapped back, and guess what it came back to? It came back to this level. So if I take you to the other chart again, which has plotted all these so I'm going to scroll back. So yesterday market opened there, it immediately went up, but it closed below it. For this 5 minute, because it's a 5 minute candle, for this 5 minute, the trend of the day at that time was down. It came back to it, retested it, went up slightly, but then it continued to go down. And as soon as it cleared this range, you knew that all you had to do was just go short here and continue to go. So price kept down. So all the way till this, the trend based on the 5 minute candles was actually sideways, but the trend of the day was down. So as long as price kept below that, the trend of the day was down. So let's go one day before that. So on this day, price immediately left the open level and went down. During this entire period, the trend of the day was down. Now let's go to this day. So this is a mixed day where it starts with the trend of the day when it's down, but then it goes above it, and then during the rest of the day, the trend of the day was up. Here's an interesting day for this one. So this one starts as a confusion, goes below it. So the trend based on the moving average and the price was up, but the trend of the day for that moment was down. As soon as price goes above this, and then it starts to go up, then during the rest of the period, the trend of the day kept us long only. Now in this situation, the market is quite far away from the trend of the day, and you see, you know, a wave like so, and there's some resistance up there. If you have plotted and it hits that, so let's suppose it's done wave 3, 4, and 5, and it's hit target zone 1. Let me actually plot that for you. So you have this. Let me just start it from wave 1. So you can see that there's a wave 3, 4, and a 5. It's hit that, maybe some levels to the left from the hourly chart. You can do that, and then you can predict some reversals. So as you can see, reversals are happening. If you were to trade this over here, you would have a clear price level which you could target, which would be the trend of the day. As you can see, it comes to it and stops moving. If you use this indicator or just this simple mechanism on a daily basis and plot it on your chart and do your backtesting, you will find out that the trend of the day starts from the open. And it's a very, very simple concept. If you follow this concept, it will eliminate at least 50% of your losing trades, because you will only trade in line with the trend of the day. And that's one of my rules, that when the trend of the day is down, I will only go short unless I do a reversal entry, which I rarely do. So that is the concept of the trend of the day. The trend of the day would increase your probability of success, because you will only go with the predominant trend of that session and that day. So you won't be going against the market. So I hope you like this video, and if you do, please hit the like button and subscribe to the channel so you know you're notified, and hit that bell icon so you are notified whenever there's a new video. So see you in the next video.